we are at 7-2. We are not doing 1 or 2 in the handout. We are doing number 3. We're looking at 3 different journals. We're looking at the purchase journal and the cash payment journal. The purchase journal is for things that you buy on account. The cash payment journal are for things that you pay cash out for or that you write a check for. And sometimes all of these special journals just don't have the right features that we need for some entries, so sometimes we have to still use the general journal. So we're going to kind of play around with, I think there must be about 12 transactions we're going to look at. So I'm going to do the first few with you. We've left the dates in and the totals here, so you have something, some sort of a guide, and these will all be check figures for you. So the first one says they've purchased inventory on credit, so you know immediately to use your purchase journal. You're going to put the vendor name here, the terms here. We're going to skip this for now, and we're going to look at how much did we purchase. Well, we purchased $4,000. So we put $4,000 in here. What was it for? It was for inventory. So we'll come over here and put $4,000 here. Now, this is the important part. We're putting this full amount in at $4,000. If we pay the discount, we're going to have to decrease the value of that inventory because we have taken a discount and we will not have paid $4,000. So keep that in mind. So there's just 2 entries, very simple entries. Titleist 210 net 3, 4,000 accounts payable, 4,000 inventory. Seems to be fairly straightforward. Then let's go down and look very quickly at the cash payments, because that's our next entry. On the 3rd, you paid rent, and you debited rent expense for $2,000. So now, let's move down to that cash payment journal. And we're going to do, this is rent expense, right? You would have the reference to the account number. And now, we would debit what? There's other accounts, there's accounts payable, there's inventory, or there's cash. Well, it's another of these, so it's going to be debited right here in other accounts, and that is for $2,000. And obviously, that's the debit side, and this is the cash side, which is a credit. So that kind of sets it up. It's a very complex way of looking at this because you have multiple accounts to choose from. In this particular case, this company's decided that accounts payable, inventory, and cash are most often used in the cash payments journal. So they're going to be, what I like to say, is hard-coded in there. And your other accounts, such as rent or miscellaneous expenses, will fall under other accounts. So that's how you would use your cash payments. And you're going to go back and forth between these two, making entries per that transaction list. Now, please note, on the 10th, when you return equipment to A1 Equipment, there are no features here that allow you to do that. So you're going to have to use the journal for that entry. You are going to also have to use a journal for that entry for the 26th, when you return to Dunlop. Now what happens with these 2 returns, you have to remember to deduct them from the original when you go to pay the bill. So if you paid, okay, just keep that in mind. So you're going to have to keep some running totals here and do a little bit of calculations. On the 11th, down here, you paid Titleist the amount owed on the purchase by December 2nd, which means you took the discount. So be sure to take the discount out and to take that discount amount out of the inventory right here when you do your calculations. Now, when you get to this activity, if you get confused, be sure to email me or to message me, and I'll be glad to answer any questions you have about this. Just remember, these are your check figures. You can follow the book. It's very, very explicit. On the 10th, the accounts used, that may help a little bit just to give you some guidance. Okay, is going to be accounts payable, and then the vendor A1, whoops, and then how much are you going to take out? And I believe it's $6,100, so that one would go here. And then you would have to credit also your equipment for $6,100. Now you would have to do the same thing for the 26th. You would be AP, right? The vendor, which is Dunlop, the amount that they returned, and what does this one come out of? This one comes out of inventory. So this is a little more cumbersome, obviously, than this is, but there's no way in a special journal to reverse an entry and still maintain the purpose of that journal. So that's where you're going to use your general journal. So I will leave you with that. Message me. I keep wanting to say email, but message me. I'll be glad to help you through this. This can be a little bit confusing. Good work, okay? See you in 8.